Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within corporate filings. Today we're diving into a recent report from CXApp Inc, and let's just say there is a little something brewing, a bit of a financial reshuffle that might catch your eye. Before we jump in, if you love getting these nonsense breakdowns of important company news, do yourselves a favor and hit that subscribe button. We also have a fantastic community over on Discord, linked in the description below, where we discuss these filings and much more. Alright, so we're looking at an 8K filing from CXApp Inc. Now, these 8K reports are pretty important. They're filed when certain significant events happen that the public should know about, usually pretty quickly. Think of it as a company's way of saying, hey, something noteworthy just occurred. The earliest event reported here is the 9th of December. With the full report coming out on the 12th of December 2025. This tells us the company is being timely in its disclosures, which is a good start. We see the company is incorporated in Delaware, has a file number and an IRS employer identification number. These are standard details for any publicly traded company. This part is interesting. It lists the company's registered securities. We're talking about their common stock, which has a very tiny par value of $0.0001 per S-share. This is basically a nominal accounting value. Most importantly, it is traded on the Nasdaq stock market LLC under the ticker symbol CXI. They also have warrants to purchase common stock. Traded as CXI warrants are essentially options to buy stock at a certain price in the future, and their trading alongside the stock suggests a dynamic situation. And here is a key marker. CXApp Incorporated is an emerging growth company. This designation comes with certain advantages, like being able to delay adopting new accounting standards. They've checked the box indicating they are indeed an emerging growth company. There is also a question about opting out of extended transition periods for accounting standards, and they've opted out, meaning they're likely staying current with accounting rules. Now this is where the financial meat of this particular 8K really starts to show. The main event here is about unregistered sales of equity securities. This means the company sold shares of its stock, but not through a public offering where anyone can buy them. Instead, they sold them privately. The company issued a significant number of shares, over 3.2 million, to a company called Avondale Capital, LLC. This sale happened under a prepaid purchase agreement. What does this mean? Essentially, Avondale agreed to buy a certain amount of stock from CXApp Incorporated in advance. These shares were actually issued in December of 2025 for a price of about 35 cents per S-share. Selling shares like this, especially to a specific investor, is often done to raise capital. Companies do this when they need cash for operations, growth, or to pay off debt, and they choose this route because it can be faster and less complicated than a public offering. And they've done this, they say, under Section 4, R2 of the Securities Act of 1933. This is a common exemption for private placements, meaning they are relying on the idea that this was not a public offering. This is crucial because it means these shares weren't registered with the same way public shares are, and often these are sold to sophisticated investors. This also means that the dilution of existing shareholders will be a key point to watch. When a company issues a lot of new shares, especially at a price below what the market might consider fair, it can dilute the ownership percentage of everyone else. If you owned 100 shares before and now there are 3.2 million more, your 100 shares represent a smaller piece of the pie. Now, a standard part of many of these filings is a disclaimer about forward-looking statements. This is a legal protection. Essentially, the company is saying that while they are sharing their expectations and projections for the future, these are just estimates. Actual results could be different. They're warning investors not to rely solely on these predictions. And they list all sorts of potential risks that could affect their future performance. Things like market demand, competition, changes in laws, and management team changes are all mentioned as potential hurdles. This section is always a good reminder that the future is uncertain, and even with plans in place, things can go sideways. And finally, we get to the signatures. This confirms that the report has been officially filed. It is signed by Khurram P. Sheikh, who holds the title of Chairman and Chief Executive Officer. This gives us insight into who is officially attesting to the information in this report. So, what is the story here for CXApp Incorporated? At its core, this 8K is about raising capital through a private placement of stock. They sold over 3.2 million shares for around 35 cents each. The critical question for investors is why they needed this capital and whether this was a good deal for them. Selling shares at this price, especially for an emerging growth company, can be a sign that they urgently needed funds, or that the market perceives their stock as being at a lower valuation. This raises concerns about dilution and the company's financial health. While the company is legally operating within its rights by using the private placement exemption, The impact on existing shareholders and the company's future ability to raise capital at better terms are key points to consider. The forward-looking statements section also highlights the inherent risks CXApp Incorporated faces, from market competition to internal challenges. This filing, while brief, points to a company actively managing its financial needs, but it also raises questions about its current valuation and its strategy for growth moving forward, rather than just day-to-day operations. What is your take on this private placement from CXApp Incorporated? Does it signal a company in distress or a strategic move to fuel future growth? Let us know your thoughts in the comments below if you found this deep dive helpful. Please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community for further discussions. Thanks for watching, and we'll see you in the next one.